Hello students, myself Bhavin Soni, and I am going to teach you the basic concept accounting of partnership firm, the basic fundamentals. So let us start with the concept of partnership. Let us see the meaning of partnership. What is partnership? Partnership is a business relationship between two or more persons sharing profit or loss equally, acting for all by one or by all. Okay, so now when the partnership comes into existence, they have to prepare the partnership deed. Now what is partnership deed? Partnership deed is an oral or a written agreement made between the partners. Okay, now what happens in the absence of partnership deed? If there is no partnership deed, what happens in the partnership? Let us see. The partnership, when the partnership deed is absent, the provision of Indian Partnership Act 1932 acts. What does Indian Partnership Act 1932 defines in the partnership form? Let us see. Now the provision says when the partnership deed does not exist, the profit or loss are to be shared equally amongst the partners. The provision of Indian Partnership Act 1932 is basically to settle the quarrels between the partners. So the Partnership Act, Indian Partnership Act, provisions of Indian Partnership Act says that the profit and loss are to be shared equally amongst the partners. Then another provision is no interest on capital is to be allowed. When the partner has given the capital to the firm, then the firm is not liable to pay any interest to the partner. The next provision says no interest on drawings is to be charged. The same way, interest on drawings is not to be charged by the partner when the partner withdraws some amount from the business. The another provision says interest on loan by the partner is paid 6% per annum. When the partner gives loan to the firm, then the firm is liable to pay only 6% interest per annum. Now, in the case of loss in the firm, as it is charged against the profit, no matter if the firm has a loss, the firm has to pay interest on loan to the partner. And the last, no remuneration is to be paid to any partner. Now let us start with the format of profit and loss appropriation account. This is not the profit and loss, this is the profit and loss appropriation account, and you also, after completing the explanation, you may note down the format and the terms. Okay, now let us start with the profit and loss appropriation format. The first thing that is in the profit and loss appropriation account on the debit side is the profit and loss, that is the loss that is transferred from the profit and loss account. Okay, the next one is interest on capital. When there are two or more partners, interest on capital when the partnership has allowed or stated the particular percentage of interest on capital, the same is to be charged in the profit and loss appropriation account. The next one is the partners' salaries. Okay, then we have partners' commission. Okay, and the reserve that will be transferred from the profit and loss appropriation to the reserve. On the credit side, there will be profit and loss account, that is net profit transferred from profit and loss account. The next one is interest on drawings. If the interest on drawings is allowed to the partners, then interest on drawings is charged to the partners' drawings. Then we have to write on the credit side of the profit and loss appropriation account, and on the both side we can see that on the credit side there is the divisible loss. The loss which is from the profit loss appropriation, it will be transferred to the partner's capital account. Here net divisible profit, the same thing, it will be transferred to the credit side of partner's capital account. Now let us see the journal entries which are based on the profit and loss appropriation account. So here, as you can see that on the debit side of profit and loss appropriation account, we have a profit and loss account, that is net loss from the profit and loss. So let us compare it with the journal entries. We have first journal entry, profit transferred to profit and loss appropriation account. We can relate it with this entry. See the entry, profit and loss account debit to profit and loss appropriation account. We must remember the ledger posting. Here on the profit and loss debit side, we have profit and loss appropriation. That means on the credit side of profit and loss appropriation, that is here the profit and loss by profit and loss account on the credit side. Okay, so it is just the ledger posting. We need to remember the second entry, loss transferred to profit and loss. So that is profit and loss appropriation account debit. That is on the debit side of profit and loss appropriation account. We have two profit and loss account. Two profit and loss account. Now the third entry is for partner salaries and commission. When partner gets salary or commission, the entry will be passed as follows. That is profit and loss appropriation account debit to partners capital account or current account. Here I am using capital account and or current account. This explanation will be given to you in my next video. Now let us see on the profit and loss. On the debit side of profit and loss account, we have to interest on capital. Here I have written interest on capital. We can also write partners capital account. Instead of using two times partners capital account, I have written interest on capital, and below that X and Y, partner X and partner Y. If you are passing this combined entry, then here you have to write 2X capital account, 2Y capital account. Okay. Now for interest on capital, we have two profit and loss operation account debit to partners capital account. Same entry as it is the expense of the firm for the partner. Now the entry is profit and loss appropriation account debit to partners capital or current account. Here on the debit side you can see to interest on capital to partner salaries. Both entries are passed here. Now the third entry is for interest on drawings account. Partners capital or current account is debited here, and profit and loss appropriation account is credited. You can see on the credit side of partners profit and loss appropriation account we have interest on drawings. The same entry is posted in the profit and loss appropriation account. Then we have transfer of reserves out of profit. We have the entry profit and loss appropriation account debit to reserves account. You can see on the debit side of profit and loss appropriation to reserves. The next entry here is transfer of credit balance, that is divisible profit. This is divisible profit. So the entry will be profit and loss appropriation account debit. It is debited, so on the debit side of profit and loss appropriation account, we have two partners capital account, that is to X capital account and to Y capital account. The last entry is transfer of debit balance, that is divisible loss. Partners capital or current account is debited here, and profit and loss appropriation account is credited. You can see on the credit side of profit and loss appropriation account, we have X capital and Y capital. So you have 2 minutes to copy this. After learning the format of profit and loss appropriation account and the journal entries, let us see how the partners capital accounts are prepared. Okay, so on the basis of journal entries and partners profit and loss appropriation account, we are going to prepare partners capital account. Now in partners capital account, there are two methods. Method 1, partners, when the partners capitals accounts are fixed. Under the partners fixed capital account, there are two capital accounts to be prepared. First is partners fixed capital account, and the another one is partners current capital account. And the second method of partners capital account is partners fluctuating capital account. Okay, now let us learn the first method, that is partners fixed capital account method. Let us see partners fixed capital account. Under that method, we need to prepare two ledgers. First is partners fixed capital account, and another one is partners current capital account. In partners fixed capital account, we have to write the opening balance, that is credit balance of fixed capital account. There will be a different amount in the question, that is one will be the debit balance or the credit balance. It will be considered as the current capital account, and the another one which will be mentioned in the question, that the partners fixed capital balance is maybe 6 lakh or 7 lakh or 15 lakh. So that amount we need to write here, that is by balance brought down. Okay, the second amount that we need to write is the additional capital that a partner is bringing in the business is credited. On the debit side of partners fixed capital account, we need to write to cash or bank the amount which the partner is withdrawing out of the capital, not out of the profit. It is not the normal drawings, it is the drawings against the capital, and the remaining balance will be the balance carry forward, which will be written in the balance sheet on the liability side. The another format is partners current capital account. We need to find in the question the current balance of the partner's capital account. It can be debit balance or can be credit balance. If there is a credit balance of partner's current account, on the credit side it will be by balance brought down, and if there is a debit balance, to balance brought down. Now let us see another items which are being credited and debited in the partner's current account. The another one is by interest on capital account. See, one very good technique I will teach you to remember profit and loss appropriation account and partner's current account. What is debited in the partner's profit and loss appropriation account will be credited in the partner's current capital account. That is interest on capital, here it is debited, here it will be credited. Commission, salary, here it is debited, here it will be credited. Partner's salary, here it is debited, here it will be credited. Profit and loss appropriation, the net divisible profit, here it is debited, here it will be credited. On the same side, in the same way, on the debit side, whatever is being credited except the drawings. Here, partner's appropriation account, we do not record drawings, but in partner's current capital account, we record drawings. You may remember the format of capital account that in class 11 we have studied, that is capital plus additional capital plus interest on capital plus net profit minus drawings minus additional drawings minus interest on drawings and minus net loss. The same thing we are doing here. Okay, so on the debit side we have drawings, that this drawing is against the profit. Then we have interest on drawing, which is credited in the profit and loss appropriation account and debited in the partner's current account. The next item is to profit and loss appropriation, that is loss. The loss which is credit on the credit side of profit and loss appropriation account, this is net divisible loss which is transferred to partner's current capital account. And the last thing is to balance carry forward. It's not necessary that you will always find a credit balance that is on the debit side. You can also find the debit balance on the credit side. Okay, so this was our first method of partner's capital account, which has partner's fixed capital account and partner's current capital account. I am giving you the time to note down. Now let us learn the second method of partner's capital account. The another method is partner's fluctuating capital account. Okay, under that there will be only one ledger to be prepared and everything comes under that. Okay, we have partner's fluctuating capital account. In that, by balance brought down, that is credit balance, which is given in the question as a credit balance. Another item is cash or bank, that is additional capital. Additional capital, if the partner brings in the firm, it will be credited in the partner's fluctuating capital account. Then we have interest on capital account, we have commission, we have partner's salary, and the profit and loss appropriation account, that is the divisible profit. On the debit side of profit and loss comes to the credit side of partner's capital account. Let us see the items debited in the partner's fluctuating capital. First one is debit balance, that is to balance brought down, the debit balance of the partner's capital account. The another one is cash or bank, drawings against capital. It is not the normal drawings. The another one is two drawings against profit. The another item is interest on drawings and the profit and loss appropriation, that is the divisible loss which is on the credit side, it comes on the debit side of partner's fluctuating account. And the balance, which is this balance on the debit side, will be the credit balance. If there is an excess of debit, it will be written on the credit side, it is known as debit balance. Okay, so I am giving you 2 more minutes to note it down.